Well, markets, including Tesla, seem to be responding, rebounding, however you want to put it this morning, popping up after the big blow off yesterday. It certainly isn't because bonds have started to ease because they're continuing to go up, at least last time I checked, but we'll check all those numbers in a few minutes. We've got lots and lots and lots of news to get to this morning. So let's jump right in. We'll start with Sawyer Merritt. He's reporting that FSD 12.5.6 is starting to roll out, along with end-to-end on the highway for non-Cybertruck Teslas. So the Cybertrucks have had the end-to-end, including the highway, since last week or so, but now all the rest of the cars are going to get it as well. So this will be very interesting. Just 2 days before the event, folks are going to start to get the full stack, end-to-end, ready to go. And we'll start getting reports on that. So we'll see how that impacts the drives that people are getting. Obviously, the better the drives before Thursday, the better the show, the better the event will be received. This is from Esla Bull, and he goes as pre-54151. Okay. Congratulations to Tesla for being recognized as the only AAA rated battery energy storage system supplier in the Battery Storage Tech Bankability Report. That was all he had. I didn't look it up any further, but interesting that Tesla is the only AAA rated energy storage system. So sounds like a good deal to me. Okay, connecting the dots. I had asked him to provide me with the questions he'd like to hear answered if he was able to get in front of Elon, and here was his questions. Number one, what is the current timeline of the Robotaxi situation? When do they plan to launch the service, even if it's only on one city? What's the timeline? I think we all agreed that's an important one. He says an interventions graph, and how many interventions are expected if continued, on a log scale and to the launch date. So where are we now? What on a log scale, what would it look like in order to have a launch date, in order to get there? What do we need to do in terms of interventions? Number three, follow-up question to that. What is the sensitivity of the predictions? In other words, if they're off by a standard deviation between now and then, in terms of your log line and your expected launch date, how much further would that push things out? So do you have a set of expectations that that there's A, B, or C that could go wrong there that could really make things go out further? Just give us some kind of color on that. He says, number four, cyber cab timeline. What will be the actual production time and what are the production costs in terms of what you're expecting on the cyber cab version? He says, how many wheels will there be? Will be three, R4, faux four, two rear wheels in the middle. Anyway, is it maybe a monocycle and the passengers need to balance and juggle oranges? So as always, of course, connecting the dots has some humor going on. He says, will they be able to operate ride hailing via the X? Via X as opposed to just through the app. That's an unusual one. I don't quite understand that one. Where do owners sharing? What share do owners get? What percentage? What is the business plan? How does he see that working out? Owners get 70 and Tesla 30. What's the scoop on that? Only on cars? Will it only work on cars with FSD? Or non-FSD buyers can also share their car by switching it on and paying a fee. Of course, the usual dates. Will they have some kind of partners? Some Uber, Lyft, etc. Is that a possibility? How much of a pure third generation car is the Cybercab? Is it going to be fully unboxed? Is it going to be a complete, new? I think it's going to be something completely new, but I think he wants to know it's going to be unboxed. How do they plan to start geographically? We've talked about that quite a lot. Which cities are first? How many cybercabs do they plan to get ready before launching the service? So Are they going to wait until they actually have physical cyber cabs, which will be middle of next year, before they start the service, even if it's ready to go in terms of the level 5, level 4, whatever capabilities? Okay, I had these items. These are items that I've added recently. Some of them are repeats, but somebody asked the question, I think it was Peggy. Um, I would like to, I think that they probably have, these are very unique. Okay, that's why I'm, at least most of them. I think that they might have at least 100 vehicles right now currently being tested without drivers. Now that maybe there's still somebody in the car, maybe they're in the passenger seat, in the back seat, etc. And my theory on that is that even if you have a supervising individual sitting there with a steering wheel right there and pedals underneath them, they're still going to intervene. They're still going to disconnect the system in situations where it wouldn't be necessary. So you need to either have nobody in there at all and you're testing, or if you do have somebody in there, they got to be in the passenger seat or the back seat so that they never, ever, ever disengage. All right. And that way you start to begin to see what a robotaxi will really do if there's no chance of disengagement. And I think there's at least 100 vehicles doing that right now. Are they in some remote city in South Alabama? I don't know, but they're doing it somewhere. Number 2, cars and Optimus need to get a voice. We need voices. We need to hear the Optimus sing. We need to hear the robotaxis talk. We'll see what happens on Thursday. Hopefully that's going to happen. Number 3, robotaxi service will roll out December 1. Remember, I have my parties theory. You have a high activity usage of Uber and Lyft, etc., coming up in December because of all the parties. Therefore, I'd like to see the service supervised or unsupervised, whichever is going to be the case. December 1 would be the perfect time, as opposed to in January when things will be a little less exciting. Number 4, I'd like to see, I think we all know there's going to be a demo of the car and the app. That one is not a unique one. I think that the car, number 5, will be what we're going to show on Thursday. It's going to be all about the customer experience. A lot of energy is going to be put into how much fun it's going to be to get into this car and have it take you someplace. And the fact that it has no driver, that's interesting and it's exciting and it's the big deal. But I think it's going to be that customer experience that's going to be very much what's going to be talked about. Then number 6, as was mentioned above, what is the business plan? How does it work for everybody? All right. Reuters, because they have this event coming up this week, they went out looking and fishing for negative analysis because they said that basically all the analysts are negative. They all think it's going to be horrible. We know that's not true. We have been reporting on analysts think that it's going to be the historic day that Elon says it is. But here were a few observers, if any, and then none of the observers, a few, expect a fully functioning product. Well, yeah, that would be true. All right, here's a couple of the quotes. We believe the Robotaxi event will be long on vision and short on immediate deliverables are incremental revenue drivers, according to Bernstein analyst Tony Sacchioni. He said in a research note, the company has a track record, particularly in FSD, of being overly optimistic, and there is a significant devil in the details. Of course, we know that Tony is commonly negative on Tesla. I mean, I kind of think he likes the company, but he's pretty negative in terms of analysis. All right, this one, they need to get going because this has been sort of discussed, rumored, talked about, and announced at various forums for a while, said Elliot Johnson, Chief Investment Officer at Evolve ETFs, which manages investments in Tesla. He does not expect anything announced on Thursday to have a financial impact for 1 to 2 years. Wow. Okay, and then there's this one. We think this is several years away and still numerous technological hurdles, safety tests, regulatory approvals standing in the way. This is CFRA research analyst Garrett Nelson. He said, highlighting an increasing disconnect between the stock's lofty valuation and the reality that Tesla's earnings growth has hit a wall. Well, okay, this is Randy Kirk. If any of that made sense to you, if any of it was useful, if any of it was entertaining, please hit the like button, the subscribe button, the notify button. This morning, we will have part 2, of course, of my regular stuff with Brian White. We have Søren Basher will be recording with me this morning on Tuesday, unusually, and I'm not sure, maybe it'll be on Wednesday this week instead of anyway, he's preparing for the hurricane. There are problems with living in Florida and California, even though they're very lovely places. Generally, there are times when it's not that lovely. Also, please, you remember what to do, right? You go down and you hit that little button. Have I removed the button? I know the link is there. All right. Market Watch is saying this morning, consumer credit rose 8.9 billion in August. That sounds like a lot, but it's not. After surging a revised 26.6 in July, according to the Federal Reserve, the August gain translates into credit growth of only a 2.1 annual rate, down from the 6.3 rise in the prior month. Economists are expecting 13.2 billion. So this was way less than what the economists were expecting. And again, we're dealing with these numbers that are coming in a little odd. Key details: revolving credit, like credit cards, fell, actually went down at a 1.2 rate in August. Second small decline in the past 3 months. Non-revolving credit, comprised mostly of autos and student loans, grew by 3.3 in August after a 5.2 rise in July. And this is less volatile, of course, than consumer credit. Big picture, consumer credit spending has been driving the U.S. and global economies this year, according to economists. Recent revisions to gross domestic product data showed households have much more savings than previously thought. If you didn't see my video last night with Larry Goldberg, you want to go back and look at that. It was our Kathy Wood report. I'll show you, do a card of that later, but that was a very, very important video to go back and watch. We talk a ton about this. U.S. savings rate is a lofty 4.8% in August, well above the 2.9 reported before the revisions. I got that wrong last night. I said 5.8, it was only 4.8, the revision from 2.9. Economists expect non-revolving credit to further rebound later this year as the Fed's interest rate cuts lower borrowing costs. Okay, looking ahead, the slight decline in borrowing is another sign that the consumer may have plateaued. The consumer is putting their hands in their pockets and is not interested in spending as much. This stabilization can be a healthy thing. Of course it could. It does not come if it does not come at the expense of worry that consumers have stopped spending. Yeah, so that's the thing I've been talking about for a long time. When the consumer stops, and sometimes they stop all at once, it's like everybody calls everybody and says, okay, stop spending. No, I mean, really, this is how recessions really get started, is a sudden decision, seemingly by everybody at once, to stop spending. Okay, this is the NFIB report. You know how important I think this is. At 60% of the economy is small businesses. And the small business report this morning would indicate we're not out of the woods yet. If this is important to you, but I don't know, maybe you don't think it's important. Let me know in the comments. Anyway, the NFIB Small Business Optimism Index rose by 0.3 points in September to 91.5. It is the 33rd consecutive month below the 50-year average of 98. Okay. The uncertainty index rose 11 points to 103, the highest reading recorded. 51% of owners reported capital outlays in the last 6 months. That's pretty good, actually, but it was down 5 points from August. Meanwhile, the number of owners reporting inventory gains fell 4 points to a net negative 13. So they're not putting in inventory, but they is continuing to spend a little bit on capital goods. Small business owners are feeling more uncertain than ever, said NFIB Chief Economist Bill Dunkelberg. Uncertainty makes owners hesitant to invest, especially as inflation and financial costs continue to put pressure on the bottom line. Although some hope lies ahead in holiday sales season, many Main Street owners are left questioning whether future business conditions will improve. The key findings: 34% seasonally adjusted of all owners reported job openings they could not fill in the current period. This is down 6 points from August, and the lowest reading since January 2021. So it's getting easier and easier to find good quality employees. Not such a big problem anymore. 51% reported capital outlays in the last 6 months. That's down 5 points, as we said. Seasonally adjusted, a net 32% reported raising compensation. 32% are still increasing the wages of their employees. That's down 1 point from August, but remaining the lowest reading since April of 2021. Well, that's the good news. 23% of owners reported that inflation, that's 23%, was their single most important problem in operating their business. Higher input and labor costs both, down 1 point from August, but remaining the number one issue of small business owners. This is important when we look at everything else that's happening on this inflation front. It's a confusing mess right now. It looks like inflation is under control when you look at the major mass marketers lowering their prices, but we're going into the holiday season, so everybody's going to be vying for that consumer for the next 3 months. You've got all kinds of reporting that would indicate lower costs, lower input costs, et cetera, but you've got the bond market going up like crazy, continuing this morning. We'll look in a minute. It also said a net negative 70% of all owners seasonally adjusted reported higher nominal sales in the past 3 months, but that is down 1 point from August and the lowest reading of the year. So if we're going to have this soft landing, Wall Street is saying, no, it's looking harder. It's looking like a bad landing to them. The net percent of owners expecting higher real sales volumes rose 9% to a net negative 9%. So the net percent of owners raising average selling prices rose 2 points, and those reporting 13% lower average selling prices. All right. Seasonally adjusted, that 32% reported raising compensation. 30% are increasing what they're paying their employees. 23% plan to raise compensation in the next 3 months. So it's continuing. 17% said labor quality was their top business problem. That would be number two, as it has been for a while. Positive profits was net negative 34. That's up 3 points from August, net negative 31. I guess it was now net negative 34. Among owners reporting lower profits, 37%. Now listen to this. This is kind of the key here. Those having lower profits blamed weaker sales, 37%, rise in the cost of materials, 14%, 13% labor costs, and 11% selling prices. They aren't able to pass along the increases. For owners reporting higher profits, 47% said volume, 26% said the usual seasonal change, and 9% cited higher selling prices. They are able to pass along some of the increases they've received. 2% of owners reported that all of their borrowing needs were not satisfied. That has been consistent month after month after month, around 2% that don't know where to get their next loan. Yahoo Finance says this morning the U.S. trade deficit narrowed sharply in August as exports increased and imports fell. That is always good news, suggesting the trade can be less of a drag on the economic growth in the third quarter. The trade gap contracted 10.8% to $70.4 billion from a revised $78.9 billion in July. Analysts said on Tuesday, they were expecting it to narrow to 70.6. So that was really pretty much expected. The 𝐓𝐻 letter this morning says more concerning data from the U.S. labor market. Temporary help services jobs fell by 5.2 year over year in August to 2.69 million, the lowest level since November 2020, as has been noted by Larry Goldberg. He considers this to be one of the canaries in the coal mine. Temporary help services employment is a leading indicator. These people agree. The number of jobs in this sector has declined for 22 consecutive months, marking the longest streak since 2008. Since the March 2022 peak, temporary help services payrolls are down 15.3, the most since 2020. In past economic cycles, according to 𝐓𝐻, such a large downturn always occurred during a recession. And I know I've said many times on this program that it's not necessarily always going to be the case. We have a situation where people overemployed. They took on way more employees than they needed. They have not shed those employees yet. Although we're seeing layoffs start to pick up. By and large, you only get these temporary employees when you are really stuck, because you don't want to pay that extra money for those temps. And so I think that has a lot to do with it. The overemployment, I think, is a big part of this. So it's not 100% on this one. All right, so what do we got this morning in terms of the markets? We have got Tesla up $3.30, recovering a third of that $9 and change that it lost yesterday. We've got the Dow down 17. We've got the NASDAQ up 174. Strong rebound by the NASDAQ this morning. S&P up 34 this morning. We have got Apple. We've got the Magnificent Seven, all in positive territory this morning. And and all pretty, as you would expect with the NASDAQ up that much, Meta up 6, Microsoft up 3, Nvidia up 4. Yeah, so up pretty strongly this morning. You got the Cathie Woods basically all up except for, basically all but CRISPR, and it's only down 64 cents. So, a good rebound from yesterday's activity so far this morning in terms of percentages. That would be the Dow down 0.07, NASDAQ up a full point for 1%, and you got S&P up 0.6, Tesla up 1.39, a little bit less than you would expect given the NASDAQ up a full point. You would expect it to be up maybe more like 3% this morning. And of course, that would be recovering yesterday's entire amount. We'll see how Tesla continues. I'm continuing to believe that Tesla is going to get to 265 by Thursday. Call me crazy, but I think that's the number going into the Thursday night activity. Okay, let's go ahead and take a look over here at the bonds. Yes, you see here we're up another 1.9, let's call it 2 basis points to 4.045% on the 10-year. This is unexpected. I don't think anybody expected that. I don't remember reading a single person that thought that the bond market would be up strongly. I mean, when I say up, that the yields would be up this strongly on the 10-year after the announcement of the cut on the rates by the Fed. So, makes no sense. Can't quite figure it out. We've got the 2-year down this morning, down 1.7 basis points to 3.987. But it, in the inversion is correct on that. The 3-month is up 2.7, but the 2-month is down 1.6. There you go. So the shorts, just the difference between a 2-month and a 3-month, and then the 4-month is actually down. So the 3-month by itself is the only one of the shorts that's up strongly this morning in terms of yields. All right. Let's go on and look at the oil market. Oil is coming down last time I checked. Yeah, way down this morning. Like I said, Randy's right from time to time. Oil was stretched. There was no reason for it to be stretched that much. Yes, Larry said yesterday that if and I didn't realize this was news to me, that if Israel decided to bomb this particular island in Iran, I don't remember the name, that would really wipe out their oil industry and it would have a big impact on oil prices. What I've been saying is everything I'm reading is that there is so much oil out there. There is so much available to be pumped. There is so much more that Saudis and OPEC and Russia could be producing right now. And they're just all holding back to keep the price up. And so I thought it was nonsense that oil had gone up that much. Well, guess what? Today, oil is down $3.32. That is 4% on both Brent and Texas Intermediate, selling off like crazy. The headline is, less Middle East war risk. What? Anyway, 73.53 for Texas and 77.27 for Brent. Natural gas up a tad this morning has been interesting. Natural gas has been going the opposite of oil for the last week. Natural gas at 2.753, up 0.25% this morning. Gold also down this morning. The headline is edges up, but it's actually down $16.80 at 2,649. So that's a nice, that's kind of where we've been for a while now. Silver, though, down 3.53%, taking profits this morning on silver, $30.85. Copper also 2.1% down this morning at 447. That's the lowest we've seen copper in a couple of weeks. The dollar is up basically, let's just say the dollar's even. It's barely up against the yen, barely down against the euro. We have got the Bitcoin down 893 at 62.4. Not much to say about that. All right. So, as said earlier, be sure to watch the Larry Goldberg. You seriously, yes, it's an hour long. You need to watch all of it. I mean, seriously, you do. It was very, very, very interesting. The beginning, maybe even more interesting than the financial information, but the financial information is so valuable. But in the beginning, there's this AI report. You really want to watch it. There is the card right there, and then you can like and subscribe and hit notify. Later this morning, we will have Brian White, and then tonight, as usual, assuming everything is A-OK in Florida, we will be hearing from Nick as usual on Tuesday night. I'm not 100% sure of that, but that is my expectation. All right, that's all I got for you. I need to get on with it. It's been great talking to you.